Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis update of commodities, work our way through the dollar yields, precious metals, and commodities ETFs that I follow. I'm going to interject my financial opinions as we go. And if you need any help with anything, check out finding-value.com. That's where I dive more and deeper into individual stocks, and you can see what I'm buying and what my portfolio is adding into it. So lots of good opportunities out there right now, and we'll go through what this looks like today with the market movement. So starting off with the dollar, I still think this looks pretty good for a move lower. Again, we don't have large buying pressure. A lot of the times, what you'll see is a big down candlestick, and then you'll see small candlesticks go up like this, and that generally works its way lower. That's exactly what we're seeing. In this circle there, we've got a large selling pressure candlestick, and we've got two little guys coming on up uh, forwards resistance, the big white resistance line. And a lot of the times it comes up, it taps that resistance, and you'll get a candlestick, an inverted head or a inverted hammer candlestick, bearish engulfing, whatever it is, could be coming. I don't see it powering through yet. It very well could, but I will be bearish until I see evidence of a turn. So that's the dollar there. Looking at yields, and again, yields are and the dollar are very similar in terms of direction of movement. This still, to me, looks like we are going to head lower. There's no large green buying pressure candlestick. There's nothing there to suggest that we are turning around. And the 2-year to me looks like we will continue lower. And we could go as low as 1.7% before we hit some very strong support levels. And that's that big support level going across here. We very well could fall down here. Now, if we fall down there, that is when we could see a slowdown in the market. A slowdown generally has a decline of interest rates, especially the short end of the curve, which is the 2-year and the Fed funds rate, and this could easily head lower here, signaling maybe a slowdown in the market. The 10-year yield, looking at that today, it's slightly higher, but the downtrend is still intact or a move lower. Same with the 30-year. The 30-year, it's up against support. There's that support level. And again, it's how many times you hit it is the strength of the support level. So we hit this a few times back here. It's not just once or twice. We used it a bunch. Now we are hitting that support level again. So we'll see if it holds. The short end of the curve looks like it wants to fall, and we'll see if the long end can hold here. TYX TNX ratio, we are still up against this resistance support line, however you want to call it. And are we going to fall and invert further, or are we going to come back up and break out to the upside? Again, we'll have to wait and see. But we're up against resistance, and right now, my guess is we are going to go down for the short term before heading higher. PLT bond prices down 0.9% as yields went up on the long end. And to me, it looks like we're just stalling out a little bit, but momentum is still to the upside. I don't see large reversal candlesticks yet, and it still looks good to drift its way higher for bond prices. Coming down to gold, gold slightly lower today. We had a stronger dollar and a little bit stronger yields on the long end of the curve. And we are just slightly lower in gold. Gold still looks fantastic in my opinion. We're still sitting on top of everything, and the momentum's to the upside. Could there be a spot where this comes back before heading higher? It could. It could. But overall, bigger picture view, we are sitting on top of support going across there. Silver down 1.5%. We are up against that stinky little resistance line still, and we pulled on back. So what I look for next is, are we strengthening or are we weakening? A lot of people get annoyed at the trend line. So I just draw, this is strengthening, guys. Each time this pulls back, it has less selling pressure to pull back. So in my opinion, silver is probably going to break out here at some point very soon. Very soon being weeks, months of duration. Platinum down a little bit. Maybe we get a little bit of a pullback here, but overall, I think platinum and the deficits in platinum will launch this to the upside at some point. We're just waiting for the right market conditions for that to occur. Lower yields is what I'm referring to. And palladium down 3.4%. And it's probably going to come to this level down here for a retest. It's the breakout here of this trend line. We broke out. Usually we get a retest, and then we'll probably work our way on up. XAU to gold ratio, gold and silver mining companies underperforming gold itself. We've come back to that support level. Let's see what we do here. Are we going to get support? Keep in mind, yields do look like they want to fall, and that's generally a tailwind behind precious metals. So I'm hoping, and I know hope isn't a strategy, I get it, hoping that the gold and silver mining companies start to wake up here at some point soon. CRB index down. Oil was down today a little bit, and we were heading a little bit lower. We came up against that resistance line, hit our head on it, and came on back. CRB to S&P 500 coming back. It looks to me like we want to do like a double bottom or something like that, and we'll see if that occurs. We've got GDX down 0.5%. Kind of looks like we've got some sort of thing going on here. Tough to say, but there is some selling pressure. Maybe we pull back a little bit in the short term. Again, I don't trade the short term here, guys. I know people want me to do this, but I still think that this is going to eventually work its way on up because of the market conditions and interest rates. GDXJ looks like we're doing like a little return move back here before heading higher. Same with SILJ. SILJ is doing the same thing. Return move to that trend line. The trend line is this big trend line there. So we broke out. Going to come back and retest, and then we'll work our way on up. Crude oil down 0.61%. Looks like we're right on support, basically. We are coming down a little bit, and it looks like a pretty strong closing. There we are at support, and it looks like support's given out a little bit. Maybe we've got some downside in crude oil. Another thing to think about is generally the market with yields going down indicates that there could be weakness in the markets. And crude oil, even though we've got strong demand in gasoline and oil products and all that, and even though we're running deficits in oil even, it still could pull back in the face of all that because people think, or the perception is that we could have a market pullback and crude oil could be susceptible to a pullback. Very well could be. So that's what we're seeing here in the short term, in my opinion. TTF gas down a little bit, about 4.8%, and that still looks good to go lower. And this is just a continuation flag pattern, something like that. We've got natural gas down 2.11%. This is holding up better. We do have a bullish engulfing here. It looks like it's going to work its way sideways. We've got XOP. Yeah, you know me, does look a little bit on the weak side, and maybe we get a return move back of that broken out trend line. So we break out, and then we get a return move. Oil doesn't look super strong, and it does look like this could head lower in the short term. OIH, the oil service companies, that does look like we could head lower here on the weekly chart. And here we are heading lower, and maybe we come back to this level, mid 290s or so in OIH. A little bit of weakness still left. And again, this can turn at any time, guys. Short-term market movements can turn it can turn on a dime. Sprout Physical Uranium Trust looking very good. We're still in this rising wedge. And like I said, I'm not convinced that this is necessarily going to break down. And here we are getting a big buying pressure day to day. Looks pretty strong, finished strong. I liked how it finished, and we'll see if we can punch through here. Maybe next week we'll get a deciding, it'll decide which way it's going to break. URA is also up 0.84%. This was a dividend payout. Pay this no mind of that gap. And it's holding together today. Uranium is also up 0.84. It's holding together on top of support. URNJ is putting in a bullish engulfing. That actually looks good to go higher. So we are seeing some signs of bullishness today, and we'll see if the momentum and bullishness continue next week trading. TAN down 1.6%. Again, this still looks good to go higher. Yes, it could go down in the short term. I get it. We got maybe a little rising wedge, and it could do something like that. But overall, I think we are probably going to move on up in the medium term. Good buying pressure out of that hole, so to speak. COPX down 0.8%. Still looks good to go higher on a longer term basis. Momentum's to the upside. I still think this looks very good. Copper was down today, but we've got a lot of bullish candlesticks all through here. That still looks really good. Lithium down 1.8%. We're up against that resistance line coming up there. But we have a pretty good base here, and it looks like we want to try to work our way on up. REMX is doing the same thing. We got nice, good bullish patterns there coming on down, and it looks like we're trying to work our way on up. We are encountering a little bit of resistance right where we're at. That resistance is the bottom trend line there. We're coming right back underneath it. Now, this is an important thing. We want to punch through this. We don't want to roll over and head on lower. If there's a slowdown in the market, this very well could go lower, giving you guys a really good opportunity to buy shares because I think that the bigger, longer trends are all in place, but in the short term, with yields dropping, we very well could have a pullback. I mean, not saying that that's not possible. We are seeing a slowdown in SPX. Is this going to be a double top? Where this is a top here, and then do we get another top there where that's the double top? That's the Batman pattern. Let's wait and see. We've got kind of a bearish candlestick here, and we're struggling to go higher. It doesn't look good for a punch higher at this time. It doesn't mean it can't punch higher, but again, we'll see. If we get a big down candlestick here, we're probably going to be heading down because we're at resistance. NASDAQ's getting a little bit of selling pressure up here. It's not quite at that same resistance level as the S&P, but again, I'm not fully confident that this is just going to continue to rip higher. I think that if rates continue to go down, depending on how the market perceives that, it's really a perception game at that point. Generally speaking, when rates go down, it's good for stocks like NASDAQ and all that. But if there's a slowdown in the market at this stage of where the yield curve is inverted, if the yield curve uninverts and we get yields coming back, it's because we have a slowdown in the market. And this could easily go down with rates, which we see during a slowdown in the market. KRE down a little bit. It still looks good to go higher longer term, but we may come back and do a little retest before we move forward to the upside. It does look a little bit top heavy here in the short term where we could roll over. Emerging markets moving sideways. I still think this looks fantastic. Lower yields, lower dollar. Emerging markets, I think, might hold up decent. XHB, very similar to KRE, the regional bank ETF. Overall, it still looks good to continue higher, but we very well could head lower in the short term before heading up. We've had a monster move from $70 all the way to 95. There's not reversal candlesticks up here really, but it's a pretty big move, and I don't like chasing things. And generally speaking, when you break out of these highs, you punch through and then you do a retest a lot of the times. Moo down slightly, but we're just underneath resistance. That still looks good to go higher. There's just not much selling pressure there, at least at this time. Copper down a little bit. And I'm just trying to see what we've got here in terms of, a pattern or something like that. It still looks fine. We're coming on up. Momentum's to the upside, but we are getting a little bit of selling pressure here in the short term. I'll make a decision. Give me a couple more candlesticks here. Iron ore continuing to move on up. This looks fantastic. I think we're going higher in iron ore and steel. Aluminum continues its move on higher. This thing has been a rocket ship. Again, it's got that nice stair step pattern. It still looks good to go higher in the short term. Nice move off this bottom there. Baltic Dry Index up 0.34%. And again, I think we're going to go higher because iron ore going higher and coal trying to find its footing where it's at. I think we're going to go sideways to higher in the Baltic Dry Index because that's what most of the shipping consists of, iron ore and coal. Coal, we are coming back a little bit, but that still looks good to go higher. It looks ready to rip. This is your basing pattern, like almost like a double bottom. This is kind of your lead in. Sometimes this is on top of the line, sometimes it's on the bottom. And that looks good to work its way on up eventually. Bitcoin down 1.2%. Is this a topping pattern? Not really. Doesn't look that bad. Now, obviously, look at this, guys. Look what I can do. Oh, look at that. I can just move some lines around, right? It could be a consolidation here. We'll see if this holds up. And then Ethereum doing something very similar. You could even put this up here. It could be a flag pattern as these things work its way on up. But that looks good. The big buying, big buying pressure, small pullback. It looks good. I like the way that looks to continue higher. So that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel if you haven't already. Subscribe to the website if you like. And a lot of the analysis, I do all the individual companies, much like this, for the community on the website. We still have a discount going on, holidays, if you're interested. That's in the description link below. And we had a training session just Thursday, yesterday. I think it went pretty well. I think a lot of people learned a lot of things. We'll have another training session out in the future. I'll have to decide what day we're going to do it. And what I'm going to do is I'm going to dive further into market psychology, human psychology, chart patterns in terms of technical analysis, and individual companies. I think you can nail the overall market conditions, just nail the market conditions, but you have to choose the right vehicles to play the market with. So we can dive into that. I can show you what I look for. I can show you why I like some of the companies I like. We can dive into the presentations, and I can show you what I look for. The value isn't necessarily the stocks themselves, although there is a lot of value in them. It's the ability to learn and to break down and acquire strategies for investing. That's where the value is at. Because not only do you need strategies and know how to pick and select vehicles, which is the companies, but you also have to know, if you know a little bit of technical analysis, human psychology, you kind of know where to buy. You kind of know that you got to do opposite of everyone else. It kind of solidifies all that. And then if you watch me and what I do, you can gain some further evidence, we'll call it confidence, where you see someone doing it right in front of you. It's like, hey, this guy buys when you get falling wedges way at a bottom. He buys on these support areas. He buys when the sentiment looks like garbage. I mean, you can kind of tie it all together. And I'll go over that in the next training session that we hold, all of those things. So that's what I've got for today, guys. Hopefully you're enjoying your day, and we'll catch you next time. This is Finding Value.